So, welcome to the channel. This is Crypto Bullseye, and in this series of tutorial videos we're going to show you how you can simplify your trading techniques, overcome your paralysis analysis, but more importantly how you can bring structure to your trading plan. So let's get into the first tutorial video, starting with how to identify a trend, the application of trend lines, and if you guys would like to see more tutorial videos of this nature, hit that like button, subscribe to the channel, and don't forget to hit the notification bell so you know when we are going to release our next video. Let's get into the tutorial. So we're on the TradingView charts, and you'll see the words here highlighted in yellow: identify the trend, keyword identify. And for any of you beginners, just to emphasize, this is going to be the first thing that we do before we enter any setup, before we even predict any kind of movement, is to identify the trend. So there's three types of trend. You've got bullish, you've got bearish, and you've got neutral. Three types of trend, which is an uptrend, a downtrend, and sideways action. And the first thing that we're always going to do, identify. So I'll just quickly go over, for any of you beginners, I'll go over the three types of trend. So a bullish trend, you're making a series of higher highs and higher lows. And you see that you're moving from the bottom left of the screen to the top right of the screen in a bullish trend. So we'll just signal that by the higher highs. And then the higher lows. So that's the bullish version of a trend. Higher highs, higher lows. We'll have a look at the bearish next. Right, okay, your second type of trend, the bearish version. You're making a series of lower lows and lower highs. So you've got your lower highs and your lower lows. So that's your second type of trend, and remember there's three types of trend. So we've gone over the bull version, we've gone over the bear version, and then we'll go over the sideways range next. Right, okay, third, ranging market. Slightly different to the bullish and the bearish version, where you just trade in sideways action. And whereas previously you're making new highs and new lows in respect of the bulls and the bears version, you're not making any new local highs or any new local lows in a sideways ranging market. So there's the three types of trend. You've got your bullish, your bearish, and your neutral. And what you often see at the end of a big move, whether it's a bullish move or a bearish move, is the market cools down and goes into a bit of sideways action while it makes a decision for the next move. So it accumulates or distributes depending on whether it's bullish or bearish at the time. So you go through this sideways range before any kind of big breakout, and then once you do get the break and the close in whichever direction, this will act as support at a later date, or it's got a higher probability of acting as support at a later date. So there's your three types of trend. What we're going to do next is we'll show you how to apply your trend line and use it within your trading plan. Right, okay, to pull up the trend line, first thing that you need to do, on your toolbar on the left hand side you'll see a string of different tools. It's the second one down, and you've got very top trend line. So what I suggest you do, if you haven't done this on your TradingView, is just click the yellow star button, and what that does is it brings it onto your favorites bar, which is at the bottom. So I've already done that, so just click it on there and that'll be added to your favorites bar. We've done that. Let's expand the chart and do an example of how to apply a trend line. So I'll just use the bullish example first, where we make the series of higher highs and higher lows. So if we were to apply a trend line to this example, you just pull up the trend line from your favorites bar, and a trend line counts after a minimum of 2 touches. It takes a minimum of 2 touches to count as a trend line, and what happens is the more touches that you have, the more strength there is in that trend. So if we were to apply our trend line in this instance, see you've got, I haven't really drawn it properly, just in this example you've got 1, 2, 3. In this example you've got 2. So that in our example is a stronger trend than this. So it's a momentum line, and it gives you momentum of the direction of the trend. We're going to go over the stochastic RSI in the next video, and we'll show you how to link the two together, and we'll be going over a few different ways to how you can identify trends, how you can apply certain tools, how you can identify where momentum lies in the market and levels of overbought and oversold, and how to put them all together into your own trading plan. So the videos are all going to link up, and this is just from a basic level, and that's how you apply a trend line in a bullish trend. So we'll have a look at the bearish version now. Right, okay, the bear example, and we're identifying lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So we're identifying that we're in a bearish trend in this example. We're going to the favorites bar, we've added it to the favorites, we're pulling up the trend line, and we're applying the trend line to this chart. Slightly different to the previous one, because the previous one was at the bottom, this one's the top. We want to see where we break momentum at the top of this line in a bearish example. And I just want to, before we go over to the neutral example, I just want to explain that what we do as traders is find probabilities, higher probabilities of a likely move in the future. So we've identified we're likely to move down at the moment, we're in a downtrend. When's this likely to reverse? Well, you can use your trend line as a simple indicator to tell when a market's likely to reverse, and you'll see that in this example that I'm using, if we did manage to get the break and the close above this trend line, you come back, retest that as support, you tend to get these head and shoulders patterns as indications of reversals of trend and a possible breakout to the other side, depending on whether you're in a bearish or a bullish move, an indication of a reversal of that specific trend. And you do tend to go in a range afterwards, so you tend to go sideways while the market accumulates or distributes or makes its decision for the next move, but it's one indication is a break of that trend line to find out that there's weakness in the current trend. So you can take advantage of that as traders, and like I say, we're going to link up all of our videos together. The next thing we're going to do is the stochastic RSI, so you can use that as additional confluence with your trend line to find out whether the market's overbought or oversold at areas where you might come back and get this retest, because ultimately you can get a break. It might not break and close above, so if you took advantage of a trade at this level, it's quite often comes back down and tests the lows again. So it's always good to stack up higher on the retest rather than the initial break, in my opinion. So that's the downtrend. We'll have a look at the sideways action, the sideways based trend next. Right, okay, finally we're going to do the neutral trend line, where you're not making a series of highs, you're not making a series of lows, you're just trading in a range. And slightly different to the other two versions, the bullish and the bearish version, we're applying our trend line to both the top and the bottom of the range. So what you'll find with these trend lines is they do carry a lot more weight than what the bullish and the bearish versions do. And the reason for this is because price is pretty much at a constant during these ranges. So where you see these lows here and here and here, they're all in the same region of price, whereas the bullish version or the bearish version, this, and this is all a different price. So there's a constant that's created here and here, and you get a higher probability once you do get the break and the close and the confirmation that the market's calmed down, it's in a cool off state, it's just had a big move previously, and you've got the break and the close to the downside, and price acts as confirmation here that this is now resistance where it was previously support. You get a higher probability that you're going to continue the move down, or in the bullish example, a higher probability that you're going to continue the move up. So we can use that, as I say, in addition with the price action indicators. We can look at Japanese candlesticks, which we're going to over the next couple of episodes, and what clues they can give you as far as a reversal's in. We're going to show you how to apply different filters to your trading strategy, and how these tutorials are going to link up together is give you a basic outline as to how you can bring structure to your own trading plan. So I hope they do help, and if you do like the content, guys, subscribe to the channel, hit the notification bell, so you know when the next episode's going to be, when the next tutorial's going to be. That's going to be on the stochastic RSI, and like I said, they're all going to link up together, and you're going to be able to create your own trading plan on the back of it. So subscribe to the channel, share it with your friends, hit the like button, and we'll see you in the next episode.